What if that sudden drop you saw on the chart last week wasn't random? What if that wick, sharp, violent, and instantly reversed, wasn't a glitch in the system, but bait? Picture this. A $500 million order from a global institution sits in silence. It can't be executed in normal price action. It needs fear, chaos, volume, so they wait. Or worse, they engineer it. You see the price hover, you think you're safe, then slam. A void opens. No volume, just a vacuum. Price free falls into it. Your stop is hit. So is everyone else's. And just as quickly as it began, the price reverses. Right back to where it started. Almost mockingly. Almost perfectly. That wasn't market movement. That was market design. Welcome to the liquidity void. A psychological black hole carved into the chart, designed to pull your emotions and your capital into its gravitational grip. You're watching Trading Psychology Stick, where we decode the mental game behind every market move. What you're about to learn isn't financial advice, it's psychological intelligence. Because the best edge in trading isn't found in indicators. It's found in understanding how your mind works under pressure. This video is not about technical analysis. It's not even about chart patterns. It's about psychology. It's about how institutions, banks, hedge funds, HFTs, use invisible zones to trap your brain, not just your trades. Liquidity voids aren't just gaps on a chart, they're fear zones, memory zones, places where the human brain malfunctions predictably and profitably for someone else. You're not looking at empty space, you're looking at emotional compression, and when it snaps, when fear floods the zone, they enter. You exit, they win, you lose. And the worst part, you think it was your fault, but it wasn't. You were baited. You were pulled into a black hole that was never empty to begin with. In this video, I'm going to show you how these voids are created, why they work so well, and exactly how to spot and flip them. If you watched our last video on stop hunts, this is the psychological sequel. Stop hunts target your ego. Liquidity voids target your fear. And when both hit, it's game over. But not for you. Not anymore. Because by the end of this video, you won't just avoid these traps. You'll learn to use them. You'll see the void and smile, because finally, you'll know what it really is. Ready to decode the black hole that eats traders alive? Let's begin. Chapter 1, The Anatomy of the Black Hole. Liquidity voids don't appear. They're engineered, and you've been walking into them like clockwork. The average trader sees a sudden drop or surge and thinks, that's just volatility. But institutions? They see it as opportunity. A void isn't random chaos. It's a vacuum built by design. It's like a controlled demolition. From the outside, it looks violent. But from the inside, every brick falls exactly where it's meant to. That's how liquidity voids work. They aren't unpredictable. They're the most predictably exploited part of the market. Imagine the void as a black hole on your chart. At first glance, it's just space, but it's not empty. It's pressure waiting to be released. The kind of pressure that builds in retail traders' minds and explodes in the form of panic selling or FOMO entries. Let me take you back to Thursday morning, September 14th, 2023. EUR/USD had been ranging tightly for days, almost boring. News was expected from the ECB, but nothing major. Then, in the span of 90 seconds, price dropped 140 pips. No bounce, no explanation. Just a vertical line straight through what traders thought was support. Thousands of stop losses triggered. Trading forums exploded. Black swan, ECB leak, algo malfunction. But no, there was no event, no cause, just space, a void. One that institutions designed. Why? Because a $250 million order can't be filled when price moves slowly. It needs desperation. It needs liquidity. Your liquidity. And the only way to get it? Trigger you. Behind the scenes, a major fund had been accumulating short positions for days, quietly, in thin volume, and when enough traders had gone long, they pulled the trigger, sent the chart into a nosedive, cleared the books, and filled their own orders. The move reversed completely within 20 minutes. This is the true nature of the void. It's not just a lack of volume, it's a vacuum of patience. It's where traders act from emotion, not logic. And institutions, they know exactly how that panic feels, because they've spent decades studying it, coding it, weaponizing it. Liquidity voids are emotional echo chambers. When fear spikes, logic dies. And when logic dies, price obeys the ones who planned the chaos. So, when you see a sudden vertical move, don't ask, what news just dropped? Ask instead, who needed this to happen? Have you ever looked at a candle and thought, that was too fast? Something's off? Have you felt regret for closing a position, only to see price return as if mocking you? That wasn't coincidence. That was architecture. Now, ask yourself, what if your worst losses weren't due to bad entries, but emotional exposure? What if you've been reacting inside a structure designed to make you react? If you've ever felt that sinking feeling of, I knew something was wrong but traded anyway, you're not alone. That intuition was trying to save you from the void. But understanding the anatomy of a void is just the beginning. Because if you think these zones are rare, accidental, or purely technical, the next chapter will shatter that illusion. Because what you'll discover is that the void begins in your brain. Chapter 2, the brain inside the void. Liquidity voids aren't built on charts. They're built in your nervous system. Everyone talks about chart patterns, volume spikes, and candle formations, but nobody talks about the amygdala, and that's where the real trap begins. Because when your screen lights up red and price plunges into the abyss, it's not your system that fails, it's your brain. More specifically, your fear response. Liquidity voids hijack your biology. They trigger fight or flight faster than any lion in the jungle. Because to your brain, a 200 pip drop isn't just a loss, it's a threat to survival. It hits the same circuits as physical danger. And once that circuit lights up, your logical mind, your prefrontal cortex, goes offline. Welcome to the psychological kill zone. Let's look at what happened with a real trader during the March 2023 banking crisis. BTC had been coiling near $20,800 for hours. Classic consolidation, equal highs visible, order block below. Everything pointed to a textbook long setup. The trader entered on the bounce with perfect risk management. Suddenly, without warning, price nuked straight through the level. A $1,000 red candle formed in 3 minutes. The trader's heart raced. Hands started sweating. Without thinking, they clicked close. Took a $3,000 loss. And then, 12 minutes later, price returned exactly to their entry and continued up 5%. Why did they exit? Their strategy didn't break, their plan didn't change. But they did. Their body overrode their blueprint. In that moment, they weren't a trader. They were prey. Their brain flooded with cortisol, did what all prey does, run from pain. And that's exactly what the liquidity void is designed to do. It manufactures pain, not to kill you, but to make you run, so someone else can collect what you leave behind. This is why voids are so effective. It's not that they're technical, it's that they're biological. They exploit the built-in vulnerabilities of the human mind. The prospect theory by Kahneman and Tversky proved this. Losses feel twice as painful as equivalent gains feel good. Institutions don't need better setups. They just need you to feel pain and act fast. Think about your worst trades. Were they logical exits or emotional escapes? Have you ever hit that close button not because your plan told you, but because your body screamed at you? That wasn't weakness. It was a nervous system reaction. And unless you rewire how you relate to fear, you'll keep exiting at the exact moment they're entering. Here's something most traders never realize. Your body reacts to red candles the same way it reacts to physical threats. Your pupils dilate, your breathing changes, your decision-making switches from rational to reactive. And all of this happens in milliseconds before you even realize you're scared. The question is, are you trading the market or is your nervous system trading you? So if voids are psychological traps, the question becomes, who's building them and how? Because in the next chapter, we'll step into the mind of institutions and reveal exactly how they design the drop. Chapter 3, How Institutions Design the Drop. Markets don't crash, they get pushed. There's a myth retail traders love to believe, that price just moves, that volatility is natural, that voids are just accidents, like a gust of wind tipping over a candle. But institutions know better. They don't wait for storms, they engineer them. Liquidity voids aren't spontaneous. They're structured chaos, built on precision, manipulation, and most dangerously, your predictability. Institutions don't react to markets, they create reactions. Imagine this, a global hedge fund wants to fill a $400 million short on GBP/USD. But they can't just enter. The order book is too thin. If they start selling, they'll move the market against themselves. Slippage would kill them. So they prepare. First, they accumulate stealth positions on lower time frames, small sells, hidden in volume. Then, they light the match. A sudden burst of spoofed buy orders inflates price by 30 pips. Retail sees a breakout. Longs flood in. Trading communities start buzzing. GBP is pumping. Then, boom, those fake bids vanish. Price drops violently into a void. Retail longs get stopped. Panic spreads. Everyone starts selling. And the institution? They're on the other side, buying every drop of fear you're dumping. And when the book is filled, the price stabilizes, then climbs again. Exactly where it started, except now they're positioned, and you're out. This is the engineering blueprint for voids. Create urgency by spiking volatility with fake moves or time news. Exploit predictability by triggering herd reactions with liquidity traps. Clear the zone by sweeping resting orders, causing chain reactions. Fill orders when chaos erupts, they fill silently. This is market manipulation in its most elegant form. Not illegal, just invisible. They're not trading charts. They're trading your behavior. Have you ever chased a breakout and got stopped in seconds? Have you ever thought it moved too fast? I missed it, only to realize later that was the trap. Now ask yourself, what if every time you entered with excitement, it was designed for you to do exactly that? Because institutions don't fight against you, they use you. Think about it from their perspective. If you had to move 500 million without anyone noticing, what would you do? You'd create a diversion, a moment of chaos where everyone's looking left while you move right. That's not conspiracy, that's logistics. And once you understand their problem, you start seeing their solution everywhere. But knowing how voids are built is only half the battle. The real war happens when the void opens, and your screen lights up red. In the next chapter, we'll break down what happens inside your mind, the moment you step into the trap. Chapter 4. Inside the panic loop. The chart didn't kill your trade, your reaction did. Most traders think the moment that matters is their entry, or their stop loss, or the news event. They're wrong. The most dangerous moment in trading is the half second after your plan gets violated. That gap between shock and response is where the void swallows you whole. That's where the panic loop begins. Liquidity voids don't just clear your position, they collapse your identity. You go from confident trader to confused gambler to emotional hostage, all in 60 seconds. And you don't even know it's happening. I witnessed this firsthand during a mentorship session in April 2023. A funded trader with 2 years of consistency was shorting NASDAQ after FOMC. Perfect setup, clean confluence, everything aligned. Then came the void. Price spiked 300 points in 90 seconds. No warning, no catalyst. Their stop loss triggered, a normal loss, part of the game. They should have walked away, but something shifted. They re-entered immediately, this time long, then cut it after 30 seconds. Re-entered short, then long again, all within 15 minutes. Final damage, 6% account drawdown. Not from the original loss, that was just 1%. The other 5% came from the spiral, the chain reaction of trying to fix what wasn't broken. That's the panic loop. And every institution counts on it, because if they can trigger one emotional exit, statistics show they'll likely get 5 more irrational entries right after. Here's the psychology mapped out. First reaction equals emotional flush. Your amygdala hijacks control. Second trade equals cognitive dissonance compensation. I have to get it back. Third trade equals loss of agency. I don't care anymore. Just do something. Fourth trade equals desperation. You're not even seeing the chart anymore. Institutions don't make money from your stops. They make money from your spirals. The void isn't about where you lose. It's about how long you stay emotionally hijacked. Have you ever revenge traded? Have you stared at the screen thinking, what just happened, but still entered again? That wasn't bad strategy. That was emotional inertia. The panic loop feeds on unresolved emotion. Every time you try to trade your way out of pain, you dig deeper into the void. Now ask yourself, do you trade to win or trade to feel in control? The truth is, most traders don't lose money in the void itself. They lose money in the 10 minutes after, trying to prove the void wrong. If you've ever found yourself in a trade you don't even remember entering, with size you'd never normally use, chasing a move you'd never normally chase. You've experienced the full psychological trap, not just the void, but what it triggers in you. So, how do you break free from the gravity of the void? You can't control when it appears, but you can learn to spot it before it traps you. In the next chapter, we'll uncover the hidden signals that tell you, danger, black hole ahead. Chapter 5, Warning Signs of the Void. Void traps rarely whisper. They scream if you know what to hear. Most traders don't get caught in the void because they're blind. They get caught because they're deaf. They don't hear the warning signs, the thinning liquidity, the wick distortions, the volume vanishing before the storm. But institutions do. They listen to the silence. Because before every engineered panic, there's a pattern of tension. The market holds its breath, just long enough for you to think it's safe, and then it inhales your trade. Let me show you what actually happened on October 28, 2022. Bitcoin had been hovering at $20,100 for 6 hours straight. Volume? Declining every hour. Volatility? Compressed to nothing. Then suddenly, a spike to 2,800. Instant, violent. Thousands of breakout traders jumped in. But here's what the charts were screaming. There was no accumulation beforehand, no building volume, no higher lows, just nothing. Then explosion. The order book, completely empty above $20,500. Like someone had vacuumed out all the bids. The volume profile, no participation in the move up. Just empty space and stop losses. 10 minutes later, the inevitable. Price collapsed to $19,200 in a single candle. A full $1,600 trap in under 15 minutes. What most traders missed. The void zone had no market memory. Order flow was synthetic. All market orders, no limits. Price was moving fast, but nobody real was participating. The void announces itself through disconnection. From structure, from volume, from logic. You're entering a zone that shouldn't exist. No prior consolidation. No absorption of orders. No reaction wicks testing levels. And yet, price accelerates. Why? Because you're not seeing real liquidity. You're seeing manufactured motion. Here's your void detection checklist. Is there clean market structure behind this move? Real moves build on foundations. Do the candles match the volume? Or is price moving on air? Is the order book naturally laddered? Or does it look like Swiss cheese? Does this breakout feel too clean? Too perfect? Too easy? Are you feeling excited, urgent, afraid of missing out? That's not opportunity. That's bait. How many times have you entered a trade because it looked too good to miss? How many times have you sensed something was wrong, but clicked anyway? Now pause and ask, what if your gut instinct was screaming louder than your technical analysis, but you ignored it? What if your excitement was the entry signal, not for you, but for them? Before you take any trade in a fast-moving market, try this. Count to 5. Breathe, look at the volume, check the order book. If it still feels urgent after 5 seconds of analysis, it's probably a trap. Real opportunities don't disappear in 5 seconds, but emotional capital does. Now that you know the void's early signals, you're ready to go deeper. Because in the next chapter, we'll flip the script. How do you turn the trap into your trade? How do you fade the fear and ride the reversal that institutions leave behind? Chapter 6, Turning the Trap into Your Edge. If they built the void to trap you, what happens when you stop running? The void only works because traders run. But what if you didn't? What if, while everyone else panics, exits, reverses, you waited, watched, and entered right when fear peaked? Because here's the truth no one tells you. Void traps are predictable, not in timing, but in behavior. And if you study them, not fear them, you can turn the same chaos that wiped you out last month into the setup that gives you asymmetric trades this month. The void is the greatest lie the market tells. It says, you're unsafe. You must act now. But when you don't act, you win. December 8th, 2023. GBP USD after UK inflation data. Price spiked 120 pips in 2 minutes, a massive move that cleared both buy-side and sell-side liquidity. The reaction was predictable. Longs got stopped, shorts got triggered, everyone panicked. Price started dropping into what looked like a bottomless pit. Most traders were hitting sell in desperation, but one trader in our community did something different. They waited. They pulled up their volume profile and saw the truth. The selling was exhausted. Market delta showed buyers stepping in quietly. The 1-minute chart revealed something beautiful. Lower wicks appearing, candle bodies shrinking, selling pressure evaporating. They entered long, right in the heart of the void, while everyone else was drowning in fear. 10 minutes later, GBP/USD had recovered 70 pips. They trailed their stop with market structure, closed at 4.5 times their risk. They didn't escape the trap, they surfed it. The void isn't your enemy, it's your X-ray machine. It reveals, where others panic, your entry. Where liquidity is cheap, your opportunity. Where institutions feast, your invitation to the table. You can trade 3 types of void setups: post-void reversals, wait for exhaustion signals, then enter with the reversal. Void retests, let price return to the void zone and reject. That's your entry. Multi-time frame confluence, higher time frame support, plus lower time frame void equals precision. But the real edge? Patience. Because if you can sit in discomfort without reacting, you become everything institutions don't expect. Have you ever watched a massive red candle and smiled? Have you ever sat in the fear, unmoved, while others capitulated? If not, what would it take to become that trader? What would it take to see chaos as opportunity? Now imagine, you no longer run from the void. You run toward it, with a plan. Here's a mental exercise that changed everything for me. Next time you see a violent move, instead of asking, "Where's my entry?" ask, "Where's the pain?" Find where most traders are hurting, wait for the climax of that pain, then position yourself for the relief rally. Because markets don't stay in pain, they return to balance. And those who enter at maximum fear often exit at maximum profit. But even the smartest traders still fall into the trap. Why? Because knowledge isn't enough. In the next chapter, we'll expose the most common void mistakes traders make, even after they know the game. Chapter 7. The void mistakes that kill good traders. Most traders don't lose because they're wrong. They lose because they're early, or angry. Here's the paradox of mastery. The more you learn about liquidity voids, the more dangerous they become if you're not disciplined. Because once you see the trap, the temptation is to fight it, predict it, trade it every time. But the void doesn't reward aggression. It rewards precision and emotional neutrality. Most traders lose not from ignorance, but from overconfidence wrapped in fear. Let me share what happened in early 2023 with an experienced trader. 6 years in the markets, consistent profits, solid discipline. They discovered the concept of liquidity voids through our content, studied every example, back-tested patterns. They were convinced they'd found the Holy Grail. One week, EURJPY showed 3 setups that looked exactly like void traps. They faded all 3 without waiting for confirmation. I know this game now, they thought. All 3 moves continued deeper, no reversal. Down 3% on each position. Then emotion took over. They doubled their position size on the next trade, desperate to recover. The void did reverse this time, but they were so shaken, so angry at the market, they closed too early. Missed 80% of the move they'd waited for. They were right about the pattern, but wrong about their emotional state. And the market doesn't care if you're right when you're trading from anger. Here are the top mistakes even professional traders make with voids: chasing the void, entering mid-drop without structure or confirmation, reversing too early, fading without clear exhaustion signals, over-leveraging on reversals, thinking this has to bounce, and betting the farm, trading every void. Not all fast moves are traps. Some are just momentum, confusing volatility with manipulation. Sometimes markets just move fast, but the biggest mistake, using voids as emotional revenge. If you're trading the void to prove you're smarter than the market, you're already trapped. Have you ever seen a drop and immediately thought, "I know what this is," and entered without your usual process? Did it work? Did it feel strategic or reactive? What if the void you thought you mastered was just reflecting your need to be right? Here's the truth. The void only traps those who bring ego to the chart. It doesn't care about your knowledge. It only responds to your discipline. Think about your worst void trade. Was it really about the setup, or was it about proving something? If you're honest with yourself, you'll often find the answer isn't comfortable. But that discomfort is where growth begins. Because the best traders aren't the ones who never fall into traps. They're the ones who learn why they fell. So, what's the solution? How do you merge the logic of strategy with the discipline of restraint? In the next chapter, we'll explore the ultimate combo, how stop hunts and liquidity voids work together to either destroy you or elevate you. Chapter 8, Void plus Stop Hunt. The psychology, combo that wipes out 90%. First they hunt your pride, then they drown you in fear. Most traders think stop hunts and liquidity voids are separate tactics, but institutions, they use them in layers. First, they provoke your need to be right. Then, they activate your fear of being wrong. The result? A perfectly sequenced two-stage trap. Stop hunt into liquidity void into reversal. And unless you understand how they connect, you'll get played by both, every time. This combo is the market's most elegant kill pattern, not because it's technical, but because it's psychological. Let me walk you through April 14th, 2023. Gold had been coiling near $2,000 for 5 days. Every indicator pointed up. Sentiment readings showed 84% of retail traders were long. Everyone was waiting for the explosion higher. And it came. Sort of. At 8:47 a.m., price wicked above 2,010. Buy stops triggered across the board. Volume surged. Traders celebrated on social media, gold breaking out. But zoom out to the 4-hour chart and you'd see the truth. The real resistance was at 2,015s. That wick, it was bait. Within 3 minutes, price reversed. Not a pullback, a reversal. Gold dropped $60 in 5 minutes, slicing through support into a complete void. No bounces, no pauses, just vertical descent. Retail traders, already emotional from seeing their stops hit, now faced a different terror, free fall. They closed longs in panic, opened shorts in desperation, got stopped again when price found a floor, and then gold climbed right back to $2,000. Like nothing happened. Institutions didn't just win a trade, they harvested 2 psychological crops. First, your pride, I was right about the direction. Then, your fear, I'm losing everything. Here's the formula decoded. Step 1. Stop hunt triggers identity attachment. My analysis was correct. Step 2. Void triggers survival instinct. Get me out at any price. Step 3. Institutions fill massive orders in the chaos. Step 4. Price returns to balance after retail is cleared out. How many times have you seen your stop tagged by a whisker, only to watch price explode in your original direction? Now think deeper. What if your confidence was exactly what they were hunting? What if the trap wasn't about your stop loss? It was about your emotional attachment to being right. Stop hunts attack your ego. Voids attack your fear. Together, they create the perfect storm of self-destruction. The next time you see a perfect setup that triggers your stop before working, ask yourself, was that failure or was that the institution's entry signal? Because once you realize you're not trading against the market, you're trading against other traders' emotions, everything changes. But once you see the combo, you can counter it, because in the next chapter, we'll go one level higher and reveal how multi-market, multi-time frame voids are being used right now across stocks, crypto, and Forex. Chapter 9. The void across markets. Same fear, different masks. No matter what market you trade, the void is already there, waiting. Most traders think liquidity voids are a Forex thing, or a crypto phenomenon. But that's like saying manipulation only happens in poker, not blackjack. The truth is, wherever there's volume, emotion, and retail participation, there's a void. Whether it's Apple after earnings, Ethereum on a quiet Sunday, or gold during CPI, voids manifest differently, but always serve the same purpose: to exploit panic, to fill orders, to erase retail. Let me show you how the same pattern plays out across different markets. Case 1, stocks. April 2022, Netflix earnings disaster. The stock gap down 25% in after-hours trading. At market open, retail rushed to short, thinking they'd ride the collapse further. But check the volume profile. Massive accumulation in the first 30 minutes. Institutions were buying every share retail was dumping. By noon, Netflix had recovered 12%. The panicked shorts squeezed out at the worst possible price. Case 2, crypto. December 18th, 2022, a quiet Sunday. Ethereum suddenly dropped 6% in 3 minutes. No news, no catalyst. Just a massive wick into thin liquidity. On-chain analysis later revealed, whales accumulated $90 million worth during that exact void. Retail sold the bottom in fear. Case 3. Commodities. Gold during inflation data. First, a fake breakout triggers buy stops. Then, immediate reversal into a void, down $40 in minutes. Retail panics. Smart money accumulates. Price returns to the exact starting point within an hour. Rinse and repeat. The form changes, but the pattern is universal. Emotional catalyst plus thin liquidity equals engineered trap. And when traders don't respect market conditions, they get devoured by the void structure. Even timeframes shift your perception. On the 1-minute chart, voids feel like chaos. On the 4-hour, they look like precision surgery. Same move, different lens. But the psychology remains constant. What markets do you trade? Do you really believe your asset class is immune to these dynamics? Now, pause. Have you ever seen an unexplained move in stocks, crypto, or indices and dismissed it as random? What if that wasn't randomness, but invisible intention? The void isn't tied to a ticker symbol. It's tied to human emotion. And wherever traders gather, emotion pools. And where emotion pools, institutions hunt. Here's what changed my perspective forever. Start watching multiple markets simultaneously during major moves. You'll notice voids often happen across assets at the same time. Not because of correlation, because of coordinated liquidity hunting. When fear spikes in one market, it creates opportunities in others. The traders who see this bigger picture are the ones who stop being prey. But now that you understand the where and how of the void, you still need one final weapon. A risk management system designed to survive engineered chaos. Because in the next chapter, we'll show you how to protect your capital in the middle of the storm. Chapter 10. Risk management in a world built to trap you. You can't control the void, but you can control what survives it. Most traders think risk management is about numbers. 1% per trade, 2-to-1 reward ratios. Set it and forget it. But that doesn't work in a void, because the void doesn't just test your account, it tests your composure, and your strategy doesn't matter if your psychology cracks first. To trade in a market engineered for panic, you need a system built on emotional durability, not just mathematical logic, because when the trap springs, you won't have time to calculate. You'll only have time to react, and unless your rules are hard-coded into your nervous system, you'll follow fear, not the plan. I watched this play out with a funded trader in March 2023. Smart, consistent, profitable for 18 months straight. She had a textbook set up on USD/JPY, clean entry, tight stop, well-placed target. Risk management, perfect on paper. Then came the void, a post-news whipsaw that missed her stop by 0.3 pips before reversing violently. She froze, then re-entered, doubled her size to make it back, lost again, panicked, tried once more with triple size. In 45 minutes, she'd turned a 1% planned loss into a 9% account massacre. Her problem wasn't her edge, it was her risk protocol collapsing under emotional pressure. Here's how to build void-proof risk management. Risk below your emotional activation threshold. Keep positions so small that losing doesn't trigger your fight or flight response. Fear has no grip on the indifferent. Place stops outside the hunt zone. Don't put your stop where everyone else does. Place it beyond the obvious levels where institutions hunt. Use tiered confirmation. Void appears, wait. Exhaustion signals, wait. Order flow shifts. Now, consider entry. If you miss it, celebrate. You avoided a trap. Employ time frame shields. Void on the 1 minute. Check the hourly structure. Don't fight a daily trend with a scalping time frame. Institute mandatory cooling periods. After any void event, don't trade for 15 minutes minimum. Let your nervous system reset, then reassess with clear eyes. Do you have rules, or do you actually follow your rules? Be honest. Have you ever increased your risk because you were certain about a setup? Have you moved your stop closer to price, thinking they already hunted so it's safe now? Now ask, are your rules designed to protect your capital or to protect your ego? Because in a void environment, ego is the most expensive luxury you can't afford. Try this exercise. Write down your exact emotional state during your last 3 losing trades. Were you calm, anxious, angry, desperate? You'll likely find a pattern. And that pattern is what the void exploits. Once you know your emotional triggers, you can build rules that activate before your emotions do. That's real risk management. Now that you've learned to survive the storm, let's zoom out. Because the void isn't just technical or psychological, it's also philosophical. In the next chapter, we'll break some myths wide open and hear from real traders like you who've stared into the black hole and made it back alive. Chapter 11: Myths, Mistakes, and the Voices from the Void. The biggest lie about the void? That it's always bearish. The second biggest? That you can't beat it. Most trading education teaches you how to avoid traps. But what if you could understand them deeply enough to reverse engineer your survival? What if, rather than fearing the void, you learn to redefine it? To do that, we need to bust some dangerous myths, because false beliefs about liquidity voids do more damage than the void itself. Myth: voids equal bearish drop zones. False. Voids are directionless emotion vacuums. They can form in uptrends as violent pullbacks, in downtrends as short squeezes, or in ranges as stop runs. It's not about direction, it's about liquidity harvesting. Myth: institutions always win. They have advantages, yes, better data, bigger accounts, algorithmic execution. But they also make mistakes. They misread markets. They get caught offside. The difference? They don't revenge trade when they are wrong. Myth: I can avoid every trap. The point isn't to dodge every bullet. It's to recognize when you're in the crosshairs and choose not to stand there. Sometimes the best trade is patience. Real voices from real traders. A gold trader from London shared this. Price nuked during New York session. I froze completely. Lost 4 times my usual risk in minutes. Watched it reverse perfectly. I didn't even feel anger, just small, like the market had exposed exactly who I was. A crypto trader from Singapore, BTC wicked $500 in 60 seconds. My stop hit by $2. I re-entered 3 times trying to catch the reversal, got chopped apart. I knew it was a trap while I was doing it, but couldn't stop clicking. A Forex veteran from Sydney. I used to think voids were just volatility. Then I started marking them on my charts, started seeing the pattern. Now I wait for them. Best setups I've ever traded. These aren't failures, they're data points. They're proof that every trader, regardless of experience, faces the same psychological challenge. Your biggest losses don't define your skill. They reveal your emotional architecture. And once you map where it cracks, you can rebuild it stronger. The void isn't just a market condition. It's a mirror. It reflects your fears, your ego, your desperate need to be right. And until you see that reflection clearly, you'll keep feeding it. What myth about voids have you believed for too long? What story have you been telling yourself about why the market got you last time? And more importantly, are you ready to retire that story? Take a moment right now. Think of your worst void loss. Instead of focusing on what the market did, focus on what you did. What did you feel? What did you tell yourself? What would you do differently? That gap between what happened and what you do now, that's where mastery lives. Now you're almost ready. One final chapter remains. It's not about charts. It's not even about psychology. It's about identity. Because in the final part, we'll ask the only question that matters. Will you master the void or keep being its victim? Chapter 12, Master the Void, or become its victim. The void doesn't need to beat your system. It just needs to beat your character. You've seen it all now, how the void is engineered, how it hijacks your nervous system, how it partners with stop hunts, how it appears across every market, every time frame. But none of that knowledge matters if you still carry the one thing it preys on most, an identity built on reaction. Because at its core, the void isn't about entries, exits, or setups. It's about who you become the moment the market no longer obeys your expectations. Do you flinch? Do you freeze? Do you fight? Or do you pause, breathe, and act like the professional you claim to be? Let me share what a trader wrote in their journal after finally conquering their void demons. The candle dropped fast. My hands stayed still. The trap triggered. My heart stayed calm. For the first time, I watched the void happen and felt nothing. Not fear, not excitement, just observation, like watching weather through a window. That's when I knew I'd changed. That's what mastery looks like. Not knowing more, being more. The final evolution in your trading journey isn't about information, it's about emotional calibration. Because the trader who can feel fear and not act from it is the one who finally escapes the gravitational pull of the void. Now, you must learn to see yourself in the setup, where you hesitate, where you crave revenge, where you feel the need to prove something. And when you catch that urge in real time, you've already won. So, now I ask you, what version of you enters the void today? And what version do you want to walk out as? Because the void doesn't kill traders, it reveals them. It asks, are you here to gamble your emotions or to execute your edge? Are you still the prey or are you ready to become the observer? The void will test you again. Tomorrow, next week, next month. It will arrive when you're confident, when you're desperate, when you think you've finally figured it out. And in that moment, you'll have a choice. React from your old patterns or respond from your new understanding. This isn't the end. It's the threshold. From here, you don't avoid the void. You study it, you map it, you respect it, and most of all, you stop running from it. Because the moment you stop fearing the black hole, you become its master. Chapter 13. Mental Shields for Psychological Panic. The void isn't the most dangerous thing on the chart. Your nervous system is. Because when the void opens, when that wick slices through your screen like a blade, you don't just lose money, you lose yourself. Your hands shake, your breath shortens. The trade you studied for days suddenly feels like an ambush. And worst of all, you know what's happening. You've read the books, you've watched the videos. But in that moment, all that knowledge vanishes. Your prefrontal cortex, the logical part of your brain, goes dark. And what takes over is pure survival instinct. The same circuitry that kept your ancestors alive now makes you close trades, revenge enter, and destroy your account. That's why surviving the void isn't about strategy. It's about emotional shielding, a set of mental protocols designed to hold when everything else fails. So, how do you protect yourself when your biology is against you? First, you slow time. The fastest defense against chaos is stillness. When urgency rises, pause. Count to 5. Breathe deeply. If your trade idea can't survive 5 seconds of scrutiny, it won't survive the market. Second, never place your stop where your fear lives. If you're worried about losing, you've already lost. Place stops based on structure, not stress. Third, train your mind daily. 5 minutes of meditation isn't about inner peace. It's about pattern recognition under pressure. You're teaching your brain to stay conscious when adrenaline floods your system. Fourth, practice response delays. Before clicking any button, ask, is this reactive or strategic? Fast decisions are usually fear decisions. Slow decisions are usually strong decisions. Finally, remember, the void only activates when you're emotionally invested. If your identity depends on the next trade, the void owns you. But if you trade with detachment, ironically, you become untouchable. There was a trader who joined our program after losing 40% of his account to void traps. He shook during every volatile candle, couldn't sleep after losses. Trading had become torture. Then he started implementing these shields: daily meditation, response delays, position sizing that felt boring. 6 months later, he sent this message. A void appeared today in EURUSD. I watched it happen, felt my body want to react, but I just observed, waited, then entered the reversal with a third of my usual size. Made 2R. But the real win? I felt nothing. No fear, no excitement, just execution. That's not luck. That's mental armor, built through repetition, forged through discipline. So now the question becomes, how will you build yours? Because the void will return. And when it does, it won't care how much you know. It only cares how you respond when fear floods your system. What's one mental shield you're committing to build, starting today? Is it meditation, response delays, smaller sizing? Choose one and master it. Because one shield practiced daily beats 10 shields used randomly. And speaking of practice, what if institutions aren't even breaking rules? What if everything you thought was unfair was just invisible by design? Chapter 14. Void is not illegal, but it's designed to be invisible. You've probably screamed it at your screen. This is manipulation. The sudden spike that tagged your stop. The crash that made no sense. The perfect trap that felt personal. You blame the market makers, the algorithms, the mysterious they. But what if I told you? Nothing illegal happened. What if I told you that voids aren't criminal? They're just invisible to untrained eyes. And that's the real trick, not to break rules, but to play a game most traders don't even know exists. The market isn't rigged like a carnival game. It's structured like a casino. The house doesn't need to cheat. They just need better information, better tools, and better psychology. Every liquidity void, every perfect trap, every manipulated move isn't a crime. It's capitalism. They're not stealing from you. You're donating to them because you're playing checkers while they're playing chess. Here's what actually happens. A fund needs to buy $300 million worth of EUR/USD. If they market buy, they'll spike price against themselves. So they engineer liquidity. They push price up slightly, triggering retail buy stops. Then they sell into that buying, pushing price into a void. Retail panics and sells. The fund buys every offer. Price stabilizes and rises. They profit. You lose. Nothing illegal occurred. Just superior strategy meeting inferior psychology. This is the line most traders never cross, realizing the market is immoral. It doesn't care about fairness. It cares about efficiency. You were taught to find patterns. They were taught to create them. You look for setups. They manufacture them. That's not cheating. That's the game. There's a reason regulators don't shut this down. Because using order flow isn't illegal. Understanding positioning isn't illegal. Knowing that retail will panic isn't illegal. The system doesn't punish their intelligence. It punishes your predictability. So here's the paradigm shift. What if you became less readable? What if you stopped placing stops at obvious levels? What if you delayed entries until after the trap springs? What if you recognized the game and chose to play differently? Because the moment you stop being predictable, you stop being profitable for them. And that changes the entire equation. Think about it. If you ran a billion-dollar fund and needed to move size without slippage, what would you do? You'd find where the liquidity lives. You'd trigger it. You'd absorb it. That's not conspiracy. That's business. And once you understand their business model, you can stop being their product. But before you go out thinking you've cracked the code, there's one last warning, because no matter how aware you become, how skilled, how disciplined, the void will return. And you better be ready when it does. Chapter 15. The final warning. The void will return. You've been here before. Maybe not with this knowledge, maybe not with this clarity, but you've seen the red candle. You've felt your chest tighten. You've clicked the button, and you've whispered the same lie every trader tells themselves right before disaster. Just this once. That's the moment the void wins, not when the market moves, but when you forget everything you learned and become readable again. Because the void isn't a one-time event. It's not a rare occurrence. It's a feature, not a bug. A recurring pattern in every market, every time frame, every asset. And if you forget that, if you get comfortable, it will consume you again. Here's the truth. There will always be another engineered drop, another new spike trap, another low-volume ambush, another candle that feels like it's hunting you personally. Because in a way it is. The void speaks fluent fear. It's programmed to find your weakness. And the moment you think you're immune, that's when you're most vulnerable. The void thrives on overconfidence, on routine, on the dangerous belief that you've figured it out. Every time you feel invincible, it prepares your humility. Every time you chase the perfect entry, it prepares the perfect trap. And the moment you believe you're safe, it strikes. But that doesn't mean you're powerless, because now you've seen behind the curtain. You understand the engineering, you've mapped the psychology, you've heard real stories of destruction and redemption. You've learned to surf chaos instead of drowning in it, how to pause when others panic, how to enter when others exit, and most importantly, you've begun the transformation. You're no longer the trader who gets triggered by volatility. You're becoming the observer, the pattern recognizer, the one who sees the trap and smiles, the one who waits for maximum fear and enters with minimum emotion. That's not just skill, that's evolution, because trading isn't about predicting price, it's about predicting yourself. So, the final warning is this: the void will return. It'll be faster, sneakier, more convincing. It will arrive when you're up big, when you're down bad, when you think you've graduated from its games. And in that moment, you'll face the same choice you've always faced: react from fear, or respond from wisdom. The void doesn't disappear, it evolves. And so must you. Every day, every trade, every moment of panic is an opportunity to practice, to strengthen your shields, to deepen your awareness. Because mastery isn't a destination, it's a daily choice to see clearly when the market tries to blind you. From fear to framework, your void reclamation begins now. So here we are. You've walked through all 15 layers of the trap. You've seen how the void is not just a technical zone, it's a psychological event. Not just a fast move on a chart, it's an invitation to self-destruction, disguised as urgency. But now, you no longer just see the void, you understand it. You've learned that voids are engineered, not accidental, that institutions don't break the rules, they exploit your reactions within the rules. You've discovered how stop hunts and voids work together in a two-act play. First your pride, then your panic. You've mapped how emotional cascades spread through the order book like wildfire. You've practiced how to breathe when the market screams, how to wait when everyone runs, how to enter when others are exiting in terror. You've studied reversals, explored multi-market patterns, and built risk management that works under pressure. But most of all, you've begun to shift, not just your strategy, but your identity. So now the real test begins. Not in this video, but the next time the void appears on your screen. Will you click in fear or sit in stillness? Will you chase the chaos or wait for the trap to exhaust itself, then enter with precision? If you've ever lost money inside a void and now finally understand why, I want to hear from you. Comment below with "I see it now." Because the moment you can name the trap is the moment you stop falling into it. And if this opened your eyes to the invisible game being played, share it with one trader who still thinks price moves randomly. They deserve to know what you now know. This isn't just another trading strategy. It's a mental operating system for surviving a battlefield that was never designed for retail traders to win. And in our next episode, we'll go even deeper. We'll decode the confirmation bias setup, why being right still costs you money, why perfect analysis leads to perfect losses, and how institutions turn your intelligence against you. But until then, remember this. The void will always return. The only question is, will it find you panicking or patiently waiting with the calm of someone who finally understands the game? Subscribe to master your mind, rewatch to rewire your reactions, share to spread awareness, and most importantly, practice what you've learned, because the market rewards those who see clearly when others are blinded by fear. Welcome to the other side of the void.